Hi, this is Daniel, and you're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. I'm looking for potential multi-baggers, the types of stocks that could potentially go up hundreds or even thousands of percent over time. Today, we're talking about one company that has been a multi-bagger for a lot of folks. I personally own it also. We're talking about Square stock, SQ is the ticker. And while the stock has languished for the better part of this year, they have announced a monster deal. And Wall Street just earlier this month, one of the sell-side analysts effectively said this is the stock that you must own. So I'm curious to sort of dive into this so that way you can have a recap of their business as well as maybe what's the upside that investors are potentially playing for in the years ahead. Let's dive into what's the current business as well as this monster acquisition with Afterpay. Here's the disclaimer, which you can read on your own time. And once again, in full disclosure, I do own shares in Square. And so, first of all, earlier this month, you see this must-own call by the Jefferies analyst setting a $300 price target. Now, Square is clearly a pioneer in the fintech space, and folks are very excited about their seller, their cash, and now Afterpay ecosystems that they're looking at. But I really wonder, is this truly a must-own? And look, I own it. Unrivaled Investing Journey subscribers can see my full portfolio, at the start of each month. I break that down so you can see my allocations to it. I'm not like crazy all in on this current price. This is more of a tracker position for me at this point, even though it's performed well since I've purchased it. Now, in order to understand Square, at least their historical business model, they've had two very different ecosystems. You have the seller, and you have cash. Seller in blue, cash in green. And the seller ecosystem started with point of sale solutions, POS solutions, and has since branched out for a lot of additional functionality. You could see this is sort of the North Star, and then they branch out into all this additional functionality like payroll or helping with online sales or helping with business banking, providing loans to individual merchants, and then creating custom software for specific industry verticals like restaurants where you might need reservation management. And then there's also the Cash App. Now this Cash App has a really impressive viral growth factor. Once again, starting with P2P money transfers, and that's where this sort of started, and that because they made it so easy, person-to-person money transfers, that enabled their viral growth. Now keep in mind, earlier this week I actually talked about SoFi, and I think SoFi is at a slight disadvantage relative to a player like Square because Square does have this viral growth ease of onboarding new customers because they effectively onboard with a free functionality. People don't instantly think, hey, I can go to SoFi and do money transfers. That's not really the main attraction there. Whereas here, this is the main attraction. And then you layer into higher margin things like the functions that they've branched out into, like direct deposit, effectively saying, hey, my paycheck's coming later this week. Can I get the money now at a slight discount? Boost discounts where effectively it's getting discounts on merchants that are promoting, saying, hey, we'd love for you to shop at McDonald's. We're going to offer 10% off, as well as additional functionality like stock and crypto trading. They've been a big proponent for Bitcoin trading, and I suspect very likely they'll be doing more and more loans in the near future. We'll talk about that aspect in just a second. And honestly, when you look at this business, they've been crushing it, particularly their Cash App business, which has grown from effectively nothing. Once again, Cash App is zero, and this shows their gross profit. And they had no gross profit from Cash App back in 2015. Now it's about half of their gross profit dollars. More than that, actually, in the most recent quarter, the Cash App. So it shows you just how completely just on fire this Cash App business has been. Seller has been very strong as well. They clearly have product market fit. They're clearly disrupting a huge market. And when you think about the markets that they're tapping into, you're thinking about tens of billions of dollars for both Seller as well as the Cash App. So there's definitely the potential for their businesses to 10x from here. And now where it gets really interesting is they're pursuing this acquisition with Afterpay. And it's honestly, this is a transformative deal. I mean, they are the leader. Afterpay is the leader, a definitive leader, you could say, or the leader in the buy now, pay later sector. Now, this sector has gotten a lot of interest as a sort of a better form of payments versus doing credit cards where you you may have debt that just sort of spirals out of control because the debt compounds, whereas here it's sort of fixed, like, hey, this is the amount that you owe, and there might be some sort of fee, but that's it. Like, we're not going to put you in the hole forever by racking up sort of credit card bills. And so this is viewed as a better, more moral, financing approach. So buy now, pay later. And they're paying a huge price. This is around $29 billion for Afterpay, paying mostly in stock, I think up to 99%, maybe even more, in stock, in Square stock. And you can see huge potential synergies between Afterpay and these other segments. Because keep in mind, this is buy now, pay later. You have 100,000 merchants that are already using Afterpay, major brands, 16 million consumers that are with these 100,000. And then it's like, oh, wait a second. We have 70 million consumers using Cash App. We have millions of merchants here. Don't you think buy now, pay later could be an easy solution that you roll out into both of these different segments? And like, the hypothetical example they showed is like, yeah, someone's buying some sort of gold minimalist necklace, and now you can do it in 4 interest-free payments of $50 as opposed to putting the $200 outright. And so imagine powering all of Square's seller merchants with the functionality of buy now, pay later nearly overnight, the BNPL. So that strikes me as super interesting and could create an advantageous advantage, this huge advantage for them, when you think about Square in terms of what they could offer. Advantageous advantage. Yeah, a strong advantage for them. And so then the question is, well, what does Afterpay look like, and do they have a huge amount of growth potential? And the reality is they're just tapping the market here, just beginning to scratch the surface with only 2% share of online payment transactions. And so this is the potential to easily 10x from here. So I'm looking at seller, I'm looking at cash, I'm looking at buy now, pay later. Each of these has immense growth potential. And they talk about the spending by payment type, or buy now, pay later has been growing at hundreds of percent, whereas debit and credit is effectively flat, growing single digits. So this is clearly taking share, resonating with consumers. Now, what about valuation? And keep in mind, this is a hypothetical framework that I call out, looking at a range of possibilities if things work out. I'm not going to model, let's say, a true downside scenario. Let's say a harsh recession. That's not what I'm penciling out here. So don't think of whatever figure in the low side as being like, oh yeah, that's the true downside. I'm trying to figure out, I'm trying to consider what investors might be playing for from here. Like, what's the upside based on a reasonable range of assumptions that you could consider? So what's the upside potential assuming they execute, assuming they deliver solidly? Because keep in mind, a lot of these business segments are still unprofitable. And so I'm going to be assuming, significant margin expansion over time and significant revenue growth in the years ahead. So once again, this is not a true downside, but this is a range of possibilities, thinking about what investors are playing for. And the stock price can definitely go way higher or way lower. So as we think about Square, you should really be breaking it down into a couple of different pieces. One is the Cash App, so excluding Bitcoin revenue, which is a huge percentage of their revenue. But the reason why I exclude it is I assume Bitcoin revenue is close to zero profit margin. They're effectively just enabling the trading of Bitcoin for close to no profits. So I strip that out when I'm thinking of the business. And so what I'm saying is in 2021, their Cash App, excluding Bitcoin, might be around 2.5 to 2.8 billion in revenue, excluding any sort of Bitcoin revenue. And the Cash App is extremely lucrative business model with over 90% gross margins. And I think that could potentially translate into high operating margins at scale. Now, you're not going to see that right now because they're, once again, you're operating around break-even results in terms of consolidated business. Meanwhile, they're growing at this blistering speed of over 100% year to date. So this is still hyper growth business. It's grown several 100% in the last few years. I mean, this is the business that I said back in 2015, it was nothing. Now it's over half of their gross profit dollars. And based on a range of assumptions, let's say, 35 to 45% annualized growth, 25 to 35 times multiple, maybe 35 to 45% operating margins long term. Keep in mind, nowhere near that right now on a consolidated basis for Square. I'm saying this segment alone could potentially be worth around $75 billion to $210 billion, maybe more. That's sort of back of the envelope of what I'm saying. Well, what could the Cash App be worth? The next aspect is the seller ecosystem. Now, unlike the super high margin Cash App, the seller ecosystem only has around 45% gross margins. So this is literally half of the margins that you're seeing with the Cash App in terms of gross profit dollar. While the seller ecosystem likely benefits from significant competitive advantages, keep in mind, once a merchant sort of gets set up with the Square, point of sale system and the software, that creates real switching costs and likely a network effect because there are a host of operating apps that sort of integrate with Square. Think of taxes or payroll or different, enterprise resource, solutions that you might need. And so I look at this as a very strong business, but it's still just much lower margin, 45% gross margins, and generally much slower growth. So it's also subject to the vagaries of the small and medium-sized business segment of the economy. So what's that mean? Like, why is that a good or a bad thing? Well, small and medium-sized businesses generally go out of business more often. So that means higher business churn, means it's harder to grow. And you also have economic cyclicality, where, as you saw in 2020, the business was really volatile, partly because of the stay-at-home sort of orders where people couldn't go shopping in physical stores. So that said, they do have an online aspect to their business model as well. But as I look at this, thinking about a range of assumptions, much lower operating margins long term, I'm thinking somewhere of a teens to maybe 20% operating margins, maybe annualized growth of 15 to 25% in the years ahead, maybe a 20 to 25 times multiple. I'm getting a range of around $20 to $60 billion for the Square, the seller ecosystem. And so then that leaves this last component, which is Afterpay, which now Square is paying a very full multiple for Afterpay, around 30 times sales. They're not profitable, but clearly have this enormous potential, growing at nearly 100% year after year. Assuming 50 to 60% annualized growth in, let's say, the next 5 years beyond 2021, and assuming long-term margins of 15 to 20%. Keep in mind, they're nowhere near that right now. They're currently unprofitable, but assuming they can get to scale longer term, if you look at, for example, their profits, their EBITDA margins, let's say outside of the US, they have very high EBITDA margins on a segment basis of like 40%. So this might be even lowballing it here. And a range of potential earnings multiples. So I'm thinking, slap on 25 to, let's say, 40 times sales, 40 times earnings for this business, assuming 15 to 20% long-term operating margins. And it's possible they're overpaying, but I am thinking to myself, yeah, there's a range here that this could be worth maybe $20 to $70 billion in the years ahead. Maybe more. Folks think, wow, the long-term operating margins could be closer to, let's say, 30%. Now, the deal is expected to close around the first quarter of 2022, so a few months from now. And shareholders, Afterpay shareholders, given that they're going to be getting Square stock, in lieu of cash to complete this deal, they're going to own a little under 20% of the fully diluted Square shares after the deal. The number that's been quoted is around 18.5% will be Afterpay shareholders after the deal is closed. So there's the potential that this is a good bargain, and this could be worth, let's say, $70 billion, maybe even a lot more if their long-term margins are higher than the 20% that I'm penciling out. Once again, if you have any particular thoughts about any of these segments or Square in general, would definitely love to hear it. And so when you put it all together, looking at these different pieces, based on the current share price, which is around 240, as well as the new pro forma share count, which will probably be around 640 million shares, that gets to a pro forma market cap of around 150 billion, 156 billion, versus the potential value that I see, the upside value for these different segments, that sort of gets you to somewhere between, let's say, 115 billion and 353 billion. So somewhere between, let's say, down 30% and up maybe 120% from here. That's what I'm thinking. And so investors doing a range of reasonable assumptions might be paying for about, they're playing for 100% upside over the next 5 years when you combine these different segments. I mean, once again, this is largely an upside framework trying to think about, okay, what could investors be playing for? And so thinking, here's what I think is potentially a reasonable range of assumptions based on these three different segments. Could, the stock go way higher, way lower? Of course. If they underperform on these metrics, for example, if Afterpay doesn't grow at 50 to 60% annualized in the years ahead. Now, keep in mind, that is hyper growth, 50 to 60%. If they don't deliver on that, then I would expect Square to really get hit, because, Square is effectively giving away 1/5 of the company in stock to do this deal. So I'd say Afterpay really has to execute and deliver. Now, if you're interested in following my personal journey, as I look for potential multi-baggers, go to unrivaledinvesting.com. I personally prefer the potential multi-baggers that I own and I've called out to Journey subscribers. Now, I do, in full recognition, I do recognize I own Square stock, but the potential multi-baggers that I've called out recently, I have greater interest in and greater portfolio allocation. So if you want to see my full portfolio, how I'm allocating, go to unrivaledinvesting.com, click Join the Journey. And I'm actually looking at a potential multi-bagger now. I don't want to officially call it out yet, but based on the figures I'm looking at a company growing 100% and trading at a low price to sales multiple. Now it will have low margins. So I'm thinking there's a potential that this company could be up 300, 400% over the next 5 years. I'm still digging in. If I ultimately pull the trigger on it, I will let Unrivaled Investing Journey subscribers know. If this video has been helpful for you talking about Square stock, SQ is the ticker, please make a point of hitting that subscribe button and hit that thumbs up button. Thanks so much for watching.